you could argue that these large traders, the largest of traders that have to report to the Commodity Futures Trading Commission, are moving their positions under the cover still of no reporting. Welcome to the Comstock channel. I'm Joe Kemp, and I'm here again this week talking about soybeans. Soybeans are the star of the show, lately the leader lower, and we have now a big possible pivot point back to a bearish speculative crowd. Something I want to bring up, this catch-up data that we've got now for trader positions. We see the trader positions in soybean futures and options, and notably the big swing up. For the blue line, that's the managed money, the AKA hedge funds, the commodity trading funds, as opposed to the big dive lower in red, the commercial producer merchants. So speculative buying and farmer selling as of late on the price run up. Now, a big correction back lower, and we'll show you a chart there at the end. This speculative determination of the political aspect, along with the farmer input and how they're going to feel about additional sales here. We could bring into play the bridge payments, whether or not that holds some farmers over from making additional sales into the switchover of a new tax year soon. But ultimately, the sentiment being judged by what occurs, particularly with, of course, soybean exports to China. With everything so political, we have to go back to a big gripe we've got about the government and the fact that this huge swing of positions up for the managed money again to a big net long and down for the commercial net short to reflect that hedging of farmer selling. What we see is that this is old data and still in arrears from the government shutdown. We have the revised schedule released from the CFTC on the commitment of traders reports. What we have circled here is the current time frame. This week we'll have these three reports catching us up to the third week of November, but that will get us then only about 3 weeks behind still. And you can see that from the beginning. We were starting out about 6 weeks behind, then 5 weeks, 4 weeks. Still, though, not a look at the current data. And that's a question that I still have. If anybody can answer that, I'd love to hear it. And I haven't had a good excuse from the government either. Anything about, well, people needed to put these reports together, or time, or even impact on the market. I just don't see it, why we're waiting to catch up on the current data that we have. But in this case, if we scroll down to the bottom of the list, the current report won't be caught up until the end of the calendar year. That's more than a month and a half after the government shutdown ended. It could have been right away. We catch up with the current data. You don't even have to go week by week necessarily. Just give us what's happened since then and keep us up to date then going forward. That's not what we're seeing. Instead, you could argue that these large traders, the largest of traders that have to report to the Commodity Futures Trading Commission, are moving their positions under the cover still of no reporting, just as they were during the government shutdown, when, as we saw on the chart, the hedge funds were aggressive buyers, enough so that prices were up to encourage that farmer selling. But what would there be in terms of different decision making if that data was public and now, even with the government back up and running, up to date and current? The same thing can be argued about the export sales reports. This is the scheduling of the release day for the weekly export sales reports. And that's the other side of it. If you talk about speculators and the hedge funds, where they're positioned at, how about the traders that are buying for exports? And to know what is moving out of the country or not. What we could have been observing, for one, as an aside, are record corn exports. We had a good idea that you can tell in the market, you can tell from reports by traders and brokers. But just like soybeans, what we've determined is that there's the potential that you can have more of that buying than had been anticipated and had been estimated or ultimately largely baked into the market. So this is where we're caught up by now on the soybean export sales. The inflection up as seasonally as normal, shown by the previous year in blue and the 5-year average in green. What we've skipped over now and are still skipping over because of the delayed release schedule is the so far busiest stretch of the year for soybean export sales. So you can have these occur under the cover of no reporting. Now, the flash sales, the daily reporting system is back up and running. That covers anything above 100,000 metric tons or more, but you can see smaller purchases of a cargo or so and split among different companies that can show up not on the flash sale system, but would have been then and will be eventually in the weekly sales update, something that would come to form this chart. And to think that we'll be now caught up late, like the trader positions, something that's going to make a big deal when we talk about what's ahead for prices. Here's the price look. You can tell we're at a pivotal point now for soybean futures, quietly trending higher over the last just more than calendar year. You can see that, but now back down to a level where it looks like, okay, right back to being negative, yet we're only back to a point at which we were, at nearing the end of harvest. We're still at that level or have been higher than most of the calendar year 2025. And so to put that into perspective of how to choose of being technically bearish or not, of course, a lot of focus under that green line of the previous calendar year high from June is that gap that's on the chart extending down to 1063 for January soybeans. That's about 25 cents from the current market here, trying to decide soybean futures are this morning if they're going to trade up or down after a large slide lower in the 10 days to start December. So I talk about perspective. This is an uptrend here, again, over the last just more than one calendar year, but it's a secondary trend. It's one that's up within a much larger primary downtrend. You can see that little red line poking up in the right-hand corner. And if I zoom out on the chart, we can see that big bearish trend that we're stuck in down from the 2022 highs. It would coincide over time with a very important test, not only psychologically important, but for the chart view and this big broad downtrend that would coincide with roughly $12. And to say psychological as well, we know that that's a point where not only there's going to be some chart resistance, some speculative interest in possibly selling or taking profit on the newly built up long, if that's still what they're going to try to defend here in that trader positions review that we talked about. But it's also a point where we bring back in the farmers and think about them selling potentially a lot more of what's left over of this next crop. So lately testing $11, eyes down as we broke below that important mark to the gap, but a lot of it just simply deterministic regarding what happens politically. Finally getting those trader positions and the export sales caught up here by the end of the month, the end of the year, and then deciding on how we view Chinese demand and the political nature of the trade deal going forward. I talked about that last week. There's different perspectives on time. We can see that in the chart and the technical leanings, and we know that's true about Chinese demand. So far, it's been right to be skeptical about the political leanings of the Chinese trade deal. We still don't have an official signature on a trade agreement yet, but will it be in the intermediate and into the long-term time frame? We'll know a lot more about that again as we track what the market's saying about the data that's finally being caught up to the detriment of having been so delayed, and that gripe of the government and wondering again why these export sales, these trader positions reports are not caught up yet. But that's a subject again for another day. For now, focusing in on these soybeans and what happens next on a day when again there's some signs of stabilization, but certainly tentative. We'll track that in the Comstock report. We invite everybody to visit our website and take a look at what we're putting out there on a daily basis, twice a day, and a Sunday market preview to start out the week. Also, revisit us again here on the Comstock channel. I've been Joe Camp. Thank you.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.